Hey, what's up, guys? This is T. Today is the 4th of October. The question of the night, the title of the video, is the bottom in. Now, for what it's worth, I think any bottoming action, it's only going to be a short-term thing. Assuming, of course, everything doesn't change. The structure, the signals, all the issues. If things don't change, I think any bottom, any bounce, we're still trying to short into it. If anything, the action here on the weekly chart, it's just kind of further evidence you want to short that rally. Assuming we don't close back above that 43.50-ish, we are shaping up for 3 closes under the weekly 21. No bueno for them bulls. And then notice on the big 3 squeeze momentum histogram, for the first time since November, we're getting that negative cross. So now the weekly chart's at a point where the bulls are not only running out of gas, they're losing a little bit of structure as well. Reasons to short the bounce. But as far as putting in that short-term bottom, we didn't quite come down and smooch that 200 SMA. All right, so no tongue kiss action this time around. But one could argue we got close enough for government work. Now, what's interesting is, and I don't look at this too often, but where I think the put-call ratio can be helpful is when the market is at extremes, meaning we're very overbought or we're very oversold. Right now, I would argue we're pretty oversold. When you get a close in the put-call ratio above 1, any reading greater than 1 pretty much means everyone and their mama and their mama's boyfriend is getting short. Everybody's buying those puts, and sometimes they'll get paid. Where loading up on the puts tends to be a bit of a shittier idea is usually when the S&Ps are that far from the 21 EMA, that far below the daily mean, and then to boot, that close to potentially, at least for now, a pretty big level of support. Feels a little bit like shorting in the hole. With the close we had today, some good action here today. S&P's up 0.8. A lot of the strength came from your big boys. Tesla's up 6%, Amazon's up 1.8, Meta up 1.5, QQQ up 1.3. A little bit more green where that came from. But they take it down close enough to the target. A lot of people jumping and getting short. This gives the bulls a chance to kind of back the bears into a corner. They dumped it. They roped them into the puts. From here, they might have a chance of trying to squeeze them out. So for those of y'all with the indicators here, if we're going to go from 42.65 to 43.50, what we're going to have to get is uptrends on our lower time frames. The weekly chart is busted. The daily chart is busted. If we're going to get a $80, $90, $100 rally, 5-minute time frame, 15-minute, 30-minute, hourly, they got to get the good stuff. Right? They've got to get to the point where momentum, structure, moving average crosses, everything's aligned for a push higher. If we can get the 5-minute, 15-minute, 30-minute, etc. behaving like an uptrend, meaning price goes higher, pulls back a little bit, another push, little pullback, another push. If we can get our lower time frames behaving like an uptrend, the bears might be backed into a corner and you might see that short squeeze. So the thing that I'm going to watch tomorrow would be the 15-minute time frame. What I don't want to see is the action like you had back here. All right, they pump it. We do end up getting the 15-minute buy signal. Then they drop the ball. All right, the first good gust of wind knocked the house right down. Structure broke. 21 EMA crosses under the 50. Momentum broke. And from there, we're boogieing down to make a brand new low. All right, that's not an uptrend. So tomorrow, even if we do dip, and if anything, guys, I think a dip early in the session kind of gives us a decent chance to learn a little bit more about her. Does that first dip see everything breaking, just like it did back here? Or does that first dip see everything pretty much hold? Structure holds, the signal holds. If they can keep the progress they've made today. And as far as the signals go, the progress would be they've got the 5-minute chart bullish. They've got the 15-minute bullish. You can also view progress through the lens of, did they cancel out any sell signals? If we go to the 2-hour, the 2-hour chart might not be bullish, but at the close today, the bar went from red to blue. It's not green, it's not a buy signal, but going from red to blue, from bearish to neutral, on that time frame, it's a little bit of a step in the right direction. If we go down to the Uno, same thing, it's not bullish, but it's neutral. Into the close, they were able to cancel out that hourly sell signal. You go down to the 30. 30-minute goes from bearish to neutral. 15-minute is bullish, and the 5-minute is bullish. So there's their progress. They've cleaned up the 2-hour down to the 5-minute. And they've done a good enough job of cleaning things up to actually trigger a 5-minute and a 15-minute buy signal. That's the progress they've made. Down here near that daily 200, with evidently a lot of folks still getting short. If they can keep that progress and then build on that progress, 30-minute goes from blue to green. The hourly goes from blue to green. If those things take place, then I think we've got a decent chance here to push back towards that falling 21. So my game plan is, look for a few cheap calls, maybe some put credit spreads. Look for a few shots to try to trade it higher. The bigger trade for now would be eventually shorting that bounce. And the last thing I'll show you all here would be the dirty dollar. And for what it's worth, the dollar is still kind of playing tough to get here. She's a resilient one. But yeah, any kind of dip here back towards that 21 EMA, I think in the short term, that does wonders for the market. The dollar wasn't really weak today. It was more so flat. S&P's had a good day, the QQQ had a good day, the tech stocks had a good day. Imagine if the Dixie's actually soft for a few days. Should be helpful. So watch that Dixie, watch the S&Ps, and again, the thinking here is overall the market does remain a short. So with that being said, you take the issues on the weekly chart, you take your daily sell signal. It wouldn't be a total shock if we did continue to trade lower. But as far as probabilities, we're a bit oversold. We are right up on a big level of support. And if the bulls can punch here, we're seeing through that put-call ratio, the good people of the market are leaning short. Might be time to trap them. Might be time to squeeze them on out. So as always, guys, thank you for watching. Hope you find it helpful. If you haven't already, go on ahead and hit the like and the subscribe button. And I'm looking forward to doing a bit of a deeper dive in the Sunday video this weekend. So be good, trade well, take your dog for a walk, and I'll talk to y'all soon. Adios.